As I looked more into it and I did more research, then I found out that there are warrants that trade on the markets. So, well, can I trade them myself? And turns out that you can. And like I said, you don't need any special status from the broker to do it. You just go on, put in the symbol, click buy, and that's it.
If you've been around investing long enough, you've probably heard of warrants. They're often a sweetener in a deal. But what are they? And more importantly, can you make money trading them? Today, we sit down with former investment banker John Pangere. He's a specialist in this hidden corner of the market to get a clear, straightforward explanation and see if they belong in your portfolio. Honestly, I've never met a warrants trader before, John, so this is a first for me. Ironically, I do know that warrants trade on the open market by a fluke. I ended up with some warrants once as part of a private placement that I participated in. It wasn't a particularly successful private placement, unfortunately. And I was told by some folks who do private placements more often that the goal is to sell the stock as soon as you can and hang on to the warrants. But you take a little bit different view and you take advantage of others that have a different view. So where do warrants typically come from on the public markets?
Well, first of all, you're not the first person who's had warrants or private placements like that go south. I've done plenty of those deals myself too. I actually used to work on a lot when I was in banking. Warrants were pretty much attached to every deal. It's just because there's, risk of you might lose everything when you put money into those types of deals. So the ones that end up on the public markets are the ones that are more rare. Either they come from some sort of IPO, they come from some sort of capital raise. Sometimes they come from a company that's restructured. They went through bankruptcy process, and really you get them because they're more of a kicker, so that they compensate investors for taking that risk. What you're really trying to look for is which of those companies that have warrants are the ones worth trading. And like you said, sometimes people get rid of the stock and they hold on to the warrants. Well, I look at it and say, well, I'd rather trade the warrants. Why? Because, you have far greater upside percentage-wise if you trade the warrants than you do the stock. And especially because they can be anywhere from 3 to 5 years in time frame. You have plenty of time to make that happen.
Interesting. Okay. So I think warrants kind of get lumped in with options as sort of this mystical, hard to understand sort of corner, unless you are a market participant. Tell me what a warrant is. Like, let's make sure everyone's with us. I happen to know just through a fluke. Mm-hmm. Otherwise, I wouldn't have known. So what's a warrant? How does it work?
So yeah, they are kind of like options, but there's some pretty major differences. First is that options come from an exchange, like the CBOE. So they are the ones that are putting the options out there. Warrants actually come directly from the company. So the company is issuing the warrants to its shareholders. So that's one of the main differences. Second, options typically expire within months. Warrants tend to expire within years. Other than that, it really comes down to complexity. When you're trading options, it can get pretty complex. When you have things like butterflies and straddles and strangles, all these different, the iron condor, one of my favorite. I don't even know what it is, but because I don't trade options, but those strategies can get really complicated. And with warrants, you really only have 3 options: buy, sell, and exercise. And I don't even bother with exercising them. It's either buy or sell. And one of the other major differences is with options, you need special permission from your broker to trade them. And with warrants, you don't need anything like that. They trade just like a regular stock.
So a warrant gives you the right to buy stock at a certain price at a certain time. Is that correct?
Yeah. So let's say you invest in a company and your initial price per share is $5. And then they attach a warrant to it that says, well, you have the right to buy another share of stock for $7.50 5 years into the future. That's basically how it works. And the other major difference too is warrants are typically 1 for 1. One warrant equals 1 share of stock, whereas when you're buying an option, one contract is 100 shares of stock.
How would you say warrants fit into an investment strategy? You are dedicated to this. You're a warrants trader, right? But for the average human, right, the mere mortal, how can this help them?
So I like to say that you have really two components to your portfolio. And the first is you have your core portfolio, which is where your serious money belongs. And the second is your speculative portfolio. And that's kind of where, you're looking for these outsized gains that can boost your returns. It's not so much that that's what you're focusing on. And that's where warrants typically go into, is in the speculative side. So you really have to manage risk when you speculate. That's something that we like to do, especially with warrants, because they're so volatile. And what that really comes down to is, I always like to say you don't bet more than you can afford to lose. But let's say you put in $100, $200, $500 into a warrant and it goes 10 to 1 or more. It's going to make a difference in your portfolio.
Can you walk me through a couple of examples of what's the setup that you look for? And then when you see that setup, what can happen? And give me like the worst case scenario, and then like an average maybe, and a huge success.
Okay. There's only about 400 or so warrants that actually trade on the open market. You get maybe 50 or so that come onto the market every year, because they're constantly just going through this cycle where they come online, then they expire, and it's just, this thing that happens. And that's just the nature of them. Really what I like to look for is I kind of developed this system. It's called T.U.V. T stands for time. How much time do we have left? And really the sweet spot is about 3 to 5 years. You want to look for warrants that have time so that they can go through a typical market cycle, where if there is something that's going on where the underlying stock is out of favor for maybe a few months, well, it has plenty of time to recover if you're waiting 3 to 5 years. The second part of that, the U, is the actual underlying stock. Is it a real business? There's plenty of warrants out there from companies that are sort of flash in the pan. They may be hot for a second, but there really is no substantial business behind it. Nothing that can actually, be sustainable over the long term. And then V is volume. So you want to make sure that the warrants trade enough volume to be able to actually have a position. Just because a lot of times, these warrants are pennies, right? So if there's only maybe 1,000 or 2,000 warrants a day, that could be just maybe a few $1,000s that trades a day. That's not enough volume. Well, what I should say is if you buy those, then you could spike the volume or the price quite a bit, just because of that volatility of what happens with warrants. So as far as the worst case scenario is, you just lose whatever you put into it.
Okay.
If you buy a warrant and you put in $500 and it expires worthless, you lose $500.
Okay. It's not like an option where might have an obligation to do something or provide stock. You lose your investment. Right. Yeah. There's never an obligation to actually exercise them. That's all voluntary. Obviously, that's not what you're looking for. So what is your experience? Some go to zero, I would have to imagine, in a given year. Mm-hmm. What does the hit ratio look like, if you will? So, well, it really depends. I think looking back on my track record, and this is over the past 7 years or so, hit ratio on winners is north of 50%, which doesn't sound like a lot, but when you factor in what those gains are that you can achieve with warrants, my actual track record, it's the average winner, including, all positions, whether they've won or lost, is 136%. Oh, interesting. 136% return. That's all trades. Okay. Both winners and losers. Okay. Lumped together. Wow. Yeah. So it's sort of like, you can almost say it's like the venture investing of the stock market. So this is where you can have like fun with math, right? And you see this all the time in this industry. So I like to probe a little bit. Like, did you have one that went to 1,000,000%, and it's skewing your average? I'm being facetious,
Yeah,
but really
yeah,
what I'm trying to get at is like, did you have one or two trades that were so outside the norm that it pulled up the entire
yeah,
average?
yeah. I mean, and that's kind of what we do is we're looking for those types of trades. So we've had more than half a dozen trades that have gone 10x or more. So which is
Okay.
900% or more. Our biggest one to date is over 4,900%.
So here's what I don't understand. When I first heard about this process and your work, I thought to myself, we're in an age of high frequency trading. We get quant hedge funds with highly sophisticated algorithms, lurking in dark pools to see what everyone else is doing and then scalping a penny or two or a fraction of a penny on each trade that happens in a retail brokerage account. How can we live in a world where you can essentially find any kind of arbitrage when that's your competition?
Well, that's the kind of the funny thing. I like to say with warrants is that they're so unknown. Nobody's trading them. Like, so for instance, they're too small for big hedge funds to actually even go after. For any hedge funds of any size, really. There's just not enough of a market for them. So they're just kind of like in this no man's land. And people just kind of leave them alone unless you're, more so a smaller institutional investors, smaller, type of group like that. I wouldn't say that any high frequency funds are trading them. So
Interesting.
yeah, they kind of get lost in the fold. And here's a perfect example. And this is actually a trade that we just made January 21st. I'm sure you've heard about this deal with Transocean buying one of their rivals, Valaris. And for
Mm-hmm.
anybody that doesn't know, Transocean's one of the largest offshore oil drillers in the world. I came at it and looked and said, okay, Valaris has warrants, and this is weeks ago that I made this recommendation, and I've been tracking these warrants for a long time. Valaris actually got caught up in the downtrend of the oil markets in 2020, went bankrupt, came out of bankruptcy,
Okay.
shed over $1 billion in debt, issued warrants to their bondholders for sticking with them. Basically, the warrants end up trading. They had a 7-year time frame when they actually came on the market. So they issued these warrants. I've been like I said, I've been tracking them. I said, okay, now I think is the right time to finally get into them. And the reason was because the stock had already started to run higher more recently, but the warrants were still ticking down to the point where they were trading at about the same level as when they first came public, when they first started trading on the market. I said, let's get into the warrants. They were at $2.39 at the time. I didn't know that Transocean was going to come in and buy the company, but it worked out. Timing was, part luck, part just making sure that we got into the right market at the right time. And, we sold those warrants the day that they announced that acquisition for a 300% gain.
Over how long of a hold period did you have? I think you said
About
it.
2 weeks.
Wow.
Yeah.
Okay.
So,
Okay.
but the thing is, like, and the reason I like the warrants rather than the stock is because the stock was up. Now, granted, it's a great return. It was up just over 50%, but the warrants went 300%. So, yeah, I was able to actually leverage that move to a far greater return than I could have if I bought the stock.
The warrants were doing the exact opposite of what the stock was doing. So the market was sniffing out something, but wasn't looking at the warrants. If it's too small for a hedge fund to play in, which I understand, a hedge fund can, the biggest can deploy massive amounts of cash.
Right.
But are you able to deploy, like, say you had 100 people doing this, what would happen?
For Valaris warrants, not much really, as long as they stick with like certain risk management policies. So for instance, I never use a market order. You always use a limit order when you're buying and selling warrants. If the bid-ask spread is too wide, you don't want to be able to push that around with a market order. Let you dictate the price instead of the market telling you what the price is. Part of the reason why I think the warrants were just overlooked is because, again, who's trading them? You can't have these big houses trading them. So even though the stock was sort of creeping a little bit higher, the warrants were actually selling off at the same time because first time was starting to run out. There were a little over 2.5 years left until they expired, which is actually a lot of time. But people who hold them are probably getting frustrated. Like, what are these warrants doing? Meanwhile, the big funds just can't touch those warrants. But once the deal was announced, then they will go probably touch those warrants because they know exactly what's going to happen to them once they actually consummate the acquisition.
Okay, so that was going to be my next question. Is like, if nobody's paying attention, then who's on the other end of your trade when you want to sell?
Right.
But the buyers appear when the case gets more compelling.
In this case, the way the warrant agreement reads, and every company has a warrant agreement that they have to, abide by, basically. So, and each one is different. And in this case, Valaris basically said, if there's some fundamental transaction where, just like what's happening here, where they're getting acquired by Transocean, then what happens with the warrants is that they allow warrant holders to convert them based on what the terms of that deal are, even if the strike price is far higher than what they're getting bought out at. So they adjust them. The strike price on these warrants was over $130. The deal terms are going to be roughly, I want to say $80 a share or something close to that for, what Transocean is paying. I know it's $5.8 billion is about what the deal is valued at. Basically, what will happen is that the warrants will adjust to the price of what the acquisition is going to go off at. And that happens a lot of times. There's other cases, though, too, where, when a stock is trading far above its strike price, then you start seeing more and more activity in those warrants because you can arbitrage that. Essentially, you buy the warrant and then you can exercise it and then pocket the difference. There are funds that'll do that, too.
How correlated, I guess, would be a good question, is the warrants market to what's happening geopolitically and macro wise?
I don't think that there's really anything it's correlated to geopolitically or macro markets wise. It's all correlated to whatever the underlying stock is doing. So if there is something that affects it from that standpoint, then sure, the warrants will get affected that way. But I like to say there's always a bull market somewhere. So when there are companies in different sectors, and I can find a warrant for just about anywhere, any different market sector.
Oh, really?
Oh,
okay.
yeah.
So there's not one sector that sort of stands out. Like, in my example, I'm almost embarrassed to say it. It's sort of a joke in and of itself, but it was a gold miner that I did the private placement in, which turned out to be a hole in the ground with a liar standing next to it. Anyway, not my best experience, not my finest moment. There's a lot of those types of deals, and they're all rife with warrants. They're not represented in an outsized way in the overall tradable warrants market.
No, not in the tradable warrants market, but I know what you're saying as far as like from resources, especially mining. A lot of those mining deals, these small gold miners or explorers and everything, they tend to put warrants out, and just because, they're always looking to raise money. So, hey, we'll give you a warrant. And well, it turns out like the most of those deals never work out anyway. So, what's the warrant worth at that point? It's worthless.
Right.
But, that doesn't mean I'm not going to speculate in the gold market or in mining. Actually, we have warrants in one gold mining. Actually, it's a gold royalty company right now.
Okay.
I think we're up over 500% on those. And I've done plenty in the gold space before. But again, these are companies that actually had something to show. It doesn't have to be one sector. It's not just one thing. Like I've had trades in AI. I've had trades in space exploration, for instance.
Okay.
We did a mattress company of all things. Electric vehicles. Yeah. So it really you can find warrants in just about every market sector. But again, the key is really looking at those companies that look like either they're ready to break out, or they actually have, really good fundamentals behind their business.
So in an environment that we're in right now, where it really feels like we are well into a rotation or a broadening out in the markets where sectors other than tech are starting to get a bid, that's not a problem for you?
No, and actually, that's kind of the thesis that I'm running with right now. I've been looking at it for a little while. You can kind of call it like the a new market regime that's coming out. So instead of the past 15 plus years where it's by the index and basically you're just waiting for the mag 7 to keep churning higher, things are starting to rotate. So it's I'm looking at things like commodities. That's one of the big things that we're focusing on. Just because if you kind of look at what's happening in the commodities market overall, every maybe around 20 years, they have these sort of super cycles that come about, and when they take off, they really take off. So I think we're entering one of those periods, and one of the reasons is because usually when gold takes off, it leads everything else, and then everything else follows. You can kind of see that by just, for instance, take a look at the Bloomberg Commodities Index. When gold started its bull market, I'm going to call it September of 2022, it's up over 200% since then. The Bloomberg Commodities Index is basically flat. It hasn't followed yet, but we're starting to see those cracks appear where it's going to start taking off. Silver's one of them. You started seeing some spikes in like natural gas. So platinum, again, another thing. So, it's really, coming down to what sorts of companies are going to be caught into these new cycles. Commodities, one of them, like I said. You're trying to look for exposure internationally, exposure to more value type of companies that have been ignored in the past.
In that regard, it's not really all that different than investing in the stock market if you're a stock picker.
Right.
Okay. Interesting. Okay. How'd you get into this?
By accident, I guess. I mean,
okay.
It really comes from when I was in banking, and that's really where I learned about warrants. We did a lot of early stage venture deals, early and late stage venture deals at a small boutique bank that I worked for. We actually did, raise some capital for companies like Twitter and Bloom Energy before they went public. We did some other deals too that didn't work out. Fisker Automotive was one of them. But pretty much in every one of those deals, there were warrants attached to them. I'm like, what are these things? So I started asking questions. Somebody tell me more. And so I learned about them and I said, well, that's great. How do I get some? And in most cases, even back then, it was like, hey, you got to be an accredited investor. You got to pony up at least, I don't know, $100, $200, $300,000, maybe $1 million. I was like, well, I'm not there yet. Clearly, I'm just starting out in banking, so getting my feet wet. But as I looked more into it, and I did more research, then I found out that there are warrants that trade on the markets. So, well, can I trade them myself? And turns out that you can. And like I said, you don't need any special status from the broker to do it. You just go on, put in the symbol, click buy, and that's it.
Any further thoughts on how you'd manage risk in this space?
I'm always pounding the table on doing 3 things. And the first is you want to make sure that you're not betting more than you can afford to lose. You grow your account over time. If you have to start with $100, start with $100. Like I didn't start with, a large amount of money. I started very small, but my account grew over time. My speculative account, I should say, grew over time so that I could say, okay, I can take bigger bets now. I can jump to that next level. That's the first thing. Second thing is you take profits when it comes to you. So we take free rides all the time, which I'm sure once a stock doubles or more, then you take your original money off the table. Now that de-risks your trade.
Yep.
Everything else from there is profit. So whatever happens, if it goes back to zero, well, at least you haven't lost anything at that point. That's not the goal, of course, but I have seen warrants trade back down after taking a free ride.
Oh, interesting. Okay.
Yes. So that's another thing. is using limit orders. Never use a market order just because of the nature of warrants. And to be honest, I don't even use market orders when I trade stocks or if I'm buying a stock for the long term anyway. So I think it's just out of habit of trading warrants. I'm like, this is a much, much better way. I'm getting the price that I want to pay, or I'm getting the price that I want to sell at, than somebody telling me, well, here's what I'm going to give you. I would say finally, the one of the most important things too is just being patient. Warrants, like I said, are volatile. It's not uncommon to see wild swings either way. I've had trades where I've been down more than 80% and then turn around, and next thing you know, I've got a 2,800% return. That's actually happened. So it's just a matter of patience.
Okay, interesting. But so is that typical? Like, is this a not for the faint of heart types situation, or is that sort of a outlier?
That's probably more of an outlier for seeing something like that, and I wouldn't say like if you're faint of heart, you shouldn't trade warrants either. I would just say like, if you're managing your risk well and following those rules, then you shouldn't have a problem sleeping easy at night. If you're not sleeping at night because you're worried about your warrants positions, then you're probably doing it wrong.
This is a super interesting topic. I really appreciate your time. And you're working with the guys at Risk Hedge. I know a bunch of those guys pretty well. You put a report together with them, I understand?
Yeah, there's some reports coming out that we put together with them, and those I think should be available here pretty soon. I'm excited to work with them. I've known some of them for a little while, so now it's fun to be able to kind of come into their community and their world.
Well, I know at least the first one. Let me make sure I get the title right. It's very sophisticated. The Beginner's Guide to Warrants. But that's, I mean, like, it covers the basics. I took a look at it. It's a great report. That one is available now. There'll be a link on this page where anyone who's watching can go and grab it from the folks at Risk Hedge. And it's a free report. I always try to end my interviews by saying, what did I not ask you that I should have? So, John, what did I miss?
I think we covered quite a bit. We covered what warrants are, how they differ from options, how easy they are to trade. And I know that probably 95% or more of people don't know what warrants are, but believe me, they are the easiest thing to understand once you actually get the hang of it. I think for me, they're my favorite tool as far as speculating goes. I've been trading them for probably more than a decade now. I've had plenty of wins. I've had plenty of losses, but in the end of the day, I'm way more ahead than I am behind.